uh, Japanese candlesticks, and this will be our first thing towards going into understanding technical analysis a little better. Okay, voice is low. Okay, I'll speak a bit louder. Okay. First, this is the line from there's a man called first candlestick pattern, like the name goes, the Japanese candlesticks was actually found out by this man called Takehiro Munihisa. If I have completely butchered his name, Japanese, he was a rice trader, and he took up this concept. Okay, so before in the West, there was no concept of candlestick patterns and everything else. Okay, it was completely a Japanese concept. This man called Steve Neeson, this man called Steve Neeson went to Japan and learned about this pattern in the 80s, 1980s, right? And then he learned and he wrote a book, right? And from there it became famous and it's being used all over the world right now, right? So if you guys want to go really deep about it, there's a book by Steve Neeson, Stevnison. Okay, if you really want to go deep into candlestick patterns, that you guys can absolutely go through that book. That's the Bible of candlestick patterns. Okay. Uh, okay. So, for before going to candlestick patterns, we want to first discuss the concept of OHLC. Okay, OHLC stands for open, high, low, and close. Okay, open, high, low, and close. You don't need to buy the book. If you want it, you can. Or I can even do one thing. I have that PDF of that book. Maybe I can share it with you guys. Okay, if you guys want it again. If you guys want it, I can share the PDF with you guys. No problem. You don't need to buy it. Uh, Okay, so open, high, low, close, OHLC, stands for open, high, low, close. Let's get back to today's session. Now, they are the key price points that summarize the price action of a security. Okay, now when you add volume to it, it becomes OHLC V. Okay, it becomes OHLC V. Okay, so now let's understand what we are trying to do here. Okay, so there are mainly three types of chart. There are mainly three types of charts that mostly is used. There are actually more, but for now, let's just focus on three. Okay. So the first is a line chart. The second is a bar chart. Third is a candlestick chart. Okay. Line chart, bar chart, and candlestick chart. Okay. Uh, so what's a line chart? As you can see here, can you see if all the prices are, you know, plotted point, each point is joined together, each dot is connected, and it forms a chart, and that is a line chart. Okay. Bar chart is a little different. Bar chart, what's happening in the bar chart? You guys can see here, red, green, red, green. So I will explain to you what bar chart is. But again, I think, do you want to go into bar chart? We are not going to do bar chart. Do you want me to go into it or forget about it? Because no use, we're not going to use it. Okay. So we're not going to use it, so ignore it. Okay, so let's skip it. We are going to focus on candlestick chart. Okay, we're just going to focus on candlestick chart. And let's go to how can we look at candlestick chart. Okay, so let's go through this. Let's take some time and understand this better. Okay, so what I mentioned, 4 points that are important: open, high, low, and close. Okay, for any time frame. For example, what time does the market open in the morning? 9:50, right? The price at open is the opening price. The highest price that it reached on that particular day is the high price. The lowest price that it reached that day is the low price, and the price at which it closed at 3:30 is called the closing price. Guys, open, high, low, close. Clear? What does this 4 points mean? Okay. Now think of it, right? Let's look at this part. Let's look at this part. If you want to zoom in, I'll just zoom in a bit. Okay. So what is happening? This we're seeing. Let's focus on the green line. Okay. I'll try to do one thing. Can you one sec? Okay. Let's say the price opens here. Okay. The price opens here. Okay. Then the price goes down in the morning. So this is the price at which it opens. Okay. 9:15. Everyone with me. Okay. 9:15. The price opens here. The price goes down, 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 down here till the low. Then buyers come in, push the price high, 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 high. It goes up, 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 up. It goes the highest price of the day. And then finally, before 3:30, it comes and closes here. So this open price is here. Low price is here. The high price is here. The closing price is here. Everyone understood what has happened? We are taking an example of a day. Okay. Morning it opened here, price went down to the low level. Buyers came in, bought. I'm just explaining perfect example. Went to the high price and then came down. So OHLC, we now have this 4 points. Now, this difference between what has happened here in this picture, can you see that the close is greater than the open? The closing price is above the opening price. Yes, everyone. The closing price is above the opening price. That means if it opened at 100, if it opened at 100, today it closed at 105, let's say. The low was 98, the high was 107, for example. Correct, everyone? Right? So if the close is greater than the open, close is greater than the open, it's a bullish candlestick body. That means the buyers have basically, we are saying the close today has been above the open, hence it's a bullish candlestick. Okay, it's a bullish candlestick. Everyone clear? The bullish candlestick. Okay. Okay, for now that is clear. Now, the next part, the difference. Can you see the difference between? I'll just change the color. Uh, from the close till the open, the difference, right? This, the difference between the open and the close, this part is called the body of the candle. What is it called? The body of the candle. The difference between the close and the open is called the body of the candle. Clear again? Understood what the body means? Yes. Now, the price between the high price and the closing price here, for example, the price above, this is called the upper shadow, this part, and this part is called the lower shadow. So candlestick, for example, is, have you guys seen the wick of a candle? Candle body is there, the wick of a candle where you light, right? So think of that, right? So this is the wick of a candle. This high price between the difference from the closing to the high is the upper shadow. Difference between the open here body and the low price is the lower shadow. Okay, I will explain how, why you'll come to know all of that. For now, just understand the terms. Wick, upper shadow, lower shadow, wick, body, bullish candle. Clear, everyone? All of this part is clear? Clear? Okay. Okay. Now what happens? This was bullish candle. Okay. Let's take an example of a bearish candle. What's happening? The price is opening at 915. The price goes higher, up to the high price. Then what happens? The sellers come and push the price down. Finally, it goes up a bit and closes at this price. The open is here, the close is here, the low price is here, the high price is here. Okay. Can you now see that the close is lower than the open? Can you see that? Can you see the close is lower than the open? Yes. So this is called a bearish candle. This is called a bearish candle. Clear, everyone? Bearish candle. This was a bullish. So very easy difference. If the closing price is above the opening price, it's a bullish day. If the closing price is below the opening price, it's a bearish day. Very simple. Okay. Again, the difference between this open and close is the body. This part is the body. Body of the candle. Body of the candle. This is the upper wick, upper shadow, upper wick, and this is the lower wick. Clear, everyone? Very simple. Okay. Super. Just not okay. So this is how you are looking at a candlestick. I am hoping this is very, very clear to everyone. I have explained it in a very easy way. Okay. Okay. Now let us understand why we are looking at candlestick patterns, right? Now, there's a very big psychology behind candlestick patterns. Okay, what is that? Okay, so we are trying to understand the market sentiment. So candlestick patterns are visual representation of the market's emotion, reflecting fear, greed, and indecision. Okay, each candlestick represents the battle between buyers and sellers. Each candlestick represents battle between the buyers and sellers. So, like imagine in the 1980s, 1990s, early 2000, when there was no like chart and all of that, na computer nahi tha itna. Uh, have you guys seen, if you guys have seen news or if you guys have gone to the exchange, have you guys seen price move SDFC Bank, Bajaj Finance this, ICICI Bank this. The price, it's a ticker. Price ticker moves, right? Price ticker moves, right? Right. So a lot of people used to like note the prices down. They used to see every time this would go by, note the prices down, note the prices, and doing they look at the price and trying to visualize what is happening. Price is going up, price is going down, like that. But today we can look at the price visually. As humans, we can understand something better when we see a picture of it. Don't you guys agree? You will understand something better as a picture than a number. Okay. So the visual representation of price is done through candlestick pattern. And we will try to understand the psychology and the sentiment and the emotion behind it in today. Okay. So let's focus on that part. Okay. So we are going to cover a few things. One is the types of candlesticks. So first, we are going to cover some single candle patterns, individual patterns. Then we are going to cover some double, two candlesticks together pattern forming, and then we'll cover three candlestick patterns. So these are the ones which are important, and we'll cover them. There are many more, but these ones are the we believe if you can, become a master of this, you are good enough. Okay, you're good to go. You don't need to know everything. Okay. Okay. So the first one is called a bullish and a bearish Marubozu. Okay. So let's look at this part again. I will explain to you guys. Okay. So Marubozu in Japanese means what? Bald man, takla. Okay. Marubozu in Japanese means bald man. The only difference that you see here, what is missing here? Can you see in this green candle? What is missing here in this bullish candle? What is missing? The wicks are missing. Can you see the wicks are missing? This is missing. Correct? Clear. Very nice. I'm so happy that everyone is clear with this. Okay. Whiskers, nahi. Whiskers are for a cat. This is wick. Okay. Whiskers. Okay. Upper shadow, lower shadow. Perfect. Okay. So what you are seeing, what is happening here? Here, open is equal to the low price. Can you see that? Because hence there is no wick. If there was a wick, then the low will be thing below the open. Open is equal to the low and close is equal to the high. So understand the psychology what is happening here. 9:15 the price opens. Buyers come, push the price up, push the price up, push the price up, push the price up, push the price up. Whole day they push the price up. And finally at 3:30 they close it near the high of the day. Is that not a sign of like buyers are very strong? They're not letting the price go down. Like a bullish Marubozu is the best signal for buyers being super strong. So hence it is called a bullish Marubozu. Clear, strong buying happening here. Can you understand that as soon as it opens, it pushes the price up, as soon as it pushes the price up till the high of the day? Okay. It doesn't have to be upper circuit, lower circuit. Not for now. It doesn't have to be that. Okay. So clear with Marubozu, what is happening in Marubozu? Okay. See, I want to give you a tip here, short tip, that in a Marubozu, in perfect, this is a perfect Marubozu, right? This one is a perfect, no wick, okay? But sometimes now you might see this much, for example. Little single hair you may see like this. Does that mean it's not a Marubozu? Guys, I will say no. It is still a Marubozu. Sometimes a little bit here and there doesn't matter. But if the wick was like this, then it's not a Marubozu. Understood? Understood? You have to understand a little relative. It can't be perfect. The markets may thoda bahut open niche doesn't have to be open is exactly equal to a low. For example, if the open was at 1000, again, sorry for my bad handwriting. The low may be that it's 999.8. But it's, you see, right? It's very close. Upar, thoda bahut upar niche it can be, but it's almost equal. Can I say that? It's almost equal. There's not much different. But if it was, let's say, 990, then it's not a Marubo. I would say. I would not take it as a very strong Marubo. Similarly here. Okay, everyone? Clear? Okay, so this is a clear case of bullish sentiment. Very clear case of bullish sentiment. Similarly here, what's happening? Open is equal to the high and close is equal to the low. That means the price is opening at 9:15. Sellers are pushing it down, 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 finally closing at the low of the day. Very strong selling is happening through the day. Selling pressure continues. Yes, through this day, selling pressure has continued and finally it has happened. Okay, so this is a bearish Marubozu. The previous one was a bullish Marubozu. Clear everyone with Marubozu? Very simple. But one of the most important things, so you don't need to remember the name of Marubozu and all of that, but understand the sentiment behind it. And hence, I'm going deeper into the sentiment. What is happening here, right? So this is a clear indication to you that the bulls, as technical analysts, all we're trying to understand is who is winning. Are the buyers are in control, the sellers are in control. Here, if the buyers are in control, you want to be on which side of the buyers, right? If you see this candle, you want to be on the side of buyers, right? So hence, you have to be aware of this part. Okay. Uh, of course, like I explained, a strong bullish candle with no shadows indicating complete control by buyers. Okay. Everyone clear with Marubozu? Can I get a clear Marubozu in the chat? Clear CCC? Clear? Might seem simple, but this is one. If you can catch Marubozu, na, Marubozu by itself is a good enough candlestick to become a profitable trader, by the way. It's that powerful a candlestick. I'm telling you guys, it's a very powerful candlestick. Okay. Let's come to Doji. Okay. Now, what is a Doji? Okay. So after doing all of this, I will go to the live chart and show you some examples. Okay. For now, let's just go through this, the theory part first, and then we'll come to I'll show you guys in the chart, the live, how does the Marubozu look and everything. Okay. Now we're coming to Doji. Okay. Now, what is Doji? Now, look at, there are different types of Doji. Okay. Now, what is happening here? Can you see that the common thing is that the open is almost equal to the close, that the body is not there anymore. The body is not there anymore. Can you guys see that? There's no body. Yes. Yes. Okay. So what's the happening? The open is almost equal to the close. Okay. It's almost equal. So very negligible body. Okay. So can you see that the open price is here? The price, let's say, went down. The price went up, and then it closed here again. Who has won here? Can you, by looking at this, who has won? The buyer or the seller? Who has won here? No one. It's a draw. It's a stalemate. Right? A doji is a sign of indecision. A doji is a sign of indecision. No one is a winner here. Okay, everyone, clear? Clear? Okay, it's almost. So now this is one. Now the only difference between all of them is you will see that here a long-legged doji is where, simple example again, I will here what's happening. The price is opening. Okay, the price has gone down, 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 gone up, 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 gone a little up, and then close here. So what has happened here? What has happened here? That the lower part is looking more longer. The lower wick, the lower shadow is bigger than the upper shadow. Can I say that? The lower shadow is bigger than the upper shadow. This part is bigger than the upper shadow. Yes. Does it not mean that even though the price tried to go down, the buyers pushed up? So here, can I say the buyers are slightly winning above the sellers? The buyers are slightly winning. They couldn't keep the price niche. Can I say that? By looking at this picture, I can say, okay, the buyers is very, it's equal, but still the buyers maybe it's a maybe 55, 45. Buyers are 55, sellers are 45. Okay. Yeah. So this is the long-legged doji. What has happened here is that Dragonfly doji, the price has opened in the open, pushed it down, and then again buyers pushed it up and closed it near the high. Again, buyers, can I say strong? The sellers tried to push it down, take control, but the buyers fought back and pushed the price up. Can I also say Dragonfly doji is a sign of buyers winning it more? Buyers are stronger than the sellers. Correct? Yes. Perfect. Gravestone doji is exactly the opposite of long-legged doji. Can I say this is what happened? Who is winner here? Can I say the sellers are slight winners here because the upper body is bigger than the lower body? Sellers are a little stronger, somewhat of a winner. Okay. And what is this? This is open is equal to high is equal to low is equal to close. What has happened here, guys? The price has opened. That is the high price. That is the low price. And that is the closing price. You know when it happens? When circuit happens. So for example, the price has opened 10% higher, which is the circuit. Now, whole day it has only traded in one price. Right? It has neither gone down, neither gone up. It has opened in the same price. And it can't go up because it's a circuit. Didn't go lower because no one is there to push the price down. And it has closed there completely. Can I say this is a clear sign of circuit filter, a 4 price doji? Correct, everyone? Super. So, can I say this is a stalemate? This is, matlab, indecision, stalemate. Again, okay? No, this is a question mark, okay? You're not sure about what it is. This is slightly bullish. This is slightly bullish. This is strong bullish. Yes, this is slightly bearish. And this is circuit. Again, horrible handwriting. Forgive me, please. Huh? Okay. So, guys, clear about this? Clear about what doji patterns we are seeing here? What doji patterns we are seeing here? Okay. Again, this is just a clear thing of it. Okay. Of course, the definition of it is written, like I mentioned, standard edition with small body. Now, I want to take an example here. Here, now, all of these cases, can you see open is equal to the close? Perfectly equal to the close. Can you see that? But in sometimes real market, it can be differing a bit. So the body can be very small. Does that mean it's not a doji? It's still a doji. Okay, guys, it's still a doji. It doesn't matter. Okay, it doesn't matter whether open is above close, close is above open. It doesn't matter as long as the bodies are very open and close is very close to each other. Because we will not get perfect scenarios. Perfect, ekdam. Very rare. Okay, except for this one, we'll get perfect. Except for this, everything body will be nothing. Okay, clear with doji, everyone. Clear, clear, clear. Give me a quick clear. Clear with doji. Okay. Then we understand hammer and hanging man. Okay, hammer and hanging man. Okay, let me explain to you what hammer and hanging man are. Okay, so imagine that the market is coming down. Okay, the stock is coming down. This is not open close. Okay, so each candle is different. Okay, this is hammer. Okay, so the price is coming down. Then it forms this candle. Okay, so that is the price has opened here, gone down, buyers bought it up, and then finally closed it here. Does it look like a hammer, guys? This one? Does it look like a hammer? Thor's hammer? Yes. So what is happening after the price has come down, downtrend? If you find this candlestick pattern here at the bottom, and this is a sign that the price is going to move up. So here the price is coming down. You're finding this candlestick pattern. This is a clear sign of reversal. This is a clear sign of the price is turning from bearish to bullish. Okay. This is a clear sign of the price moving from bearish to bullish. Give me a thumbs up if you understand what hammer is. This is the main candle. Okay. Can you see here? It is white. It is white here. What does white mean? Okay. Before we're looking at green and red. Okay. So instead of green, some people also use white. Okay. Some people also use white. And instead of red, people use black. Okay. Some people you like to use this. Instead of black is red, white is green. Okay. Okay. Now, understand. So what is happening? The price has been pushed here. Look at that. I'll just zoom in a bit. Okay. Let me. Okay. Look at this part. Okay. On the left. Can you guys see this? On the left. Here. Here. Okay. So the price is coming down. That means you are seeing a downtrend. Okay. Downtrend. You're seeing the price coming down. You see after that this kind of formation happening. That is the price is opened. The do you see a long shadow between below? Lower shadow is big. Big lower shadow. What has happened here? The price has gone down before. It was always coming down. Suddenly on this day, the sellers tried to push it again today, but then the buyers fought back and pushed the price up. Don't you think this is a clear sign of showing that the sellers have lost their strength? Sellers have lost their strength. Buyers are fighting back now. Suddenly, itna din they have not fought back, and suddenly they have thought, okay, this is the time to fight back. Before this, it is continuously coming down, but here the buyers have fought back. So this, when you see a hammer, when the stock is going down, it is a clear sign that the price can go up from here. Okay, so this is a hammer. Then we see a second thing called the hanging man, opposite. Okay, so what is happening here? That if the price is going up, if the price is going up and then you find a body like this, if you find a candle like this, right? This is a sign that the sellers are getting strong, the buyers are have lost strength, and it is going to push the price down now. Okay, so here, if you see a hammer, it is indicating you it's a good time to buy. It's good time to put your money on the buyers. And if you see a hanging man, again, if you look at the picture of it, the name is very similar to how a hanging man will look like. It's the head of the man, it's the legs of the man. They are being hung, right? So you will see that this is a sign of the price coming down from him. Quick thumbs up or yes, if I'll come to the live examples a little later. Abhi ke liye just understand this concept. And that's pretty much it. Okay. Okay. So only difference here between a hammer is found at the bottom of a trend. जब the prerequisite for a hammer is that the price has to be falling down before that. Okay. The price has to be falling down before that. Okay. And then a hammer is formed. And the body has to be green. Body has to be green. Hammer has to be green color. Okay. Hanging man has to be red color. Hanging man has to be red color. After the market has gone up, if you find a hanging man, it's a sign that the market is looking to come down. If you see a hammer at the bottom of the trend with a green color, it's an indication that the price is going to go up. Okay. Opposite. Okay. We have understood hammer and hanging man. There's opposite, something called inverted hammer and shooting star. Okay. Inverted hammer and shooting star. Okay. Now what's happening here is that hammer को उल्टा कर दो आप. Hammer, inverted hammer. If you find an inverted hammer with a green body, like you found hanging man, right, with a red body at the top, if you find an inverted hammer at the bottom, you will see that this is a sign of the market moving up from here. Here is a hammer, but opposite, ulta hammer, shooting star. Have you guys seen a shooting star in the sky? One with a high, it has a big tail, right? It has a big tail from behind, right? So here you are seeing, if we see a shooting star at the top, you are seeing that the price is going down. Okay, red color and green color body. I told you, right? Open, the difference between open and close. So what is, when will it be green, guys? When will it be green? When will it be green? When the close is above the open. When the close is above the open, only then will it be green. So here the market has come down. It has formed a hammer, inverted hammer. It is a clear sign of bullishness. Here, shooting star is that the close is below the open. Okay, so what is happening essentially here? Let me explain. What is happening essentially here? The price has been going up for a few days, right? The price has been going up for a few days. The price opened above, okay? Went up, went up. I'm explaining what's happening here, okay? Went up. And then someday, during the day, the sellers thought, you know what? I will take control. And they pushed the price lower and finally closed below. This is what has happened. So you see, the price has been going up for the past few days, but suddenly this day has come and it has formed a shooting star and it is showing up. We're expecting the price to go down from here. Okay? Clear? All four of these are reversal candlestick patterns. They are reversal patterns. Okay? Reversal matlab something was happening before. Once this pattern is formed, it shows reversal in direction. Change of direction. Clear, everyone? The price was going down. A hammer or an inverted hammer, if it's formed, it's showing from bearish to bullish. Correct? From bearish to bullish. A hammer or an inverted hammer. If it is a hanging man or a shooting star, it is price was going up, hanging man formed, price going down. Price going up, shooting star formed, price going down. Clear, everyone? A little tricky concept, but don't worry. Okay. Even I know it's very easy. Very easy. Okay. Very easy. Don't worry. When we'll cover some charts in the live, we'll also cover this also. Okay. Okay. Cool. So hammer and hanging man, we have understood. Okay, you want to do all four again? Just look at four of them again. So on the left is what, guys? On the left is what? Hanging man. This one is a hanging man, right? Found at the top. This one is a hammer with a green body found at the bottom. Okay, hammer on the right, hanging man on the green. Hanging man is red color. Hammer is green color. Okay. Okay. This is inverted hammer. Inverted hammer is green color found at the bottom. Shooting star is found at the top. This is example. Okay. So till now we have done candlestick patterns. What are the candlestick patterns that we have done, guys? Single candlestick patterns. Marubozu. Quickly we'll revise. Marubozu, big no wick, full body. Wick, doji is opposite, right? No body, only wick. No body, only wick, doji. We have done various types of doji. And then we have done we have done hammer, hanging man, shooting star, and inverted hammer. Clear with all of the single candlestick patterns? Okay. Okay. Now we come to something called double candlestick pattern. We're taking two candlestick patterns. Okay. This is a bullish engulfing candle. Okay. What is bullish engulfing? Bullish engulfing basically is, can you see that this is a chotu candle, red candle? This is also reversal pattern, by the way. Okay. Let me just. Okay. So imagine that the price is coming down like this. Okay. Price has been coming down. This pattern is a two candlestick pattern. Okay. Okay. Can you see that the previous day it was a red candle. It has been coming down. But the next day, this big green candle has eaten up the red candle. This has engulfed the red candle. This big green candle has engulfed the red candle. Can you see this? This is called as bullish engulfing. So again, once this happened, can you say that it's clear idea that the buyers have taken control, have eaten, absorbed all the sellers? It is also a reversal candles, and we expect the price to go up from it. This is a double candle reversal pattern, two candle reversal pattern. Yes, for now, let's assume these both are, each candle is 1 day. Okay, let's assume each candle is 1 day for now. Okay. Okay. Yes, Kanti Vardhanji is, I think I like where you're going with this. Someone, Kanti ji says, if we combine both of them, it will be like a hammer. Perfect. It'll actually be like a hammer. If you combine both of this together, it'll look like a hammer. Correct. Perfect. Okay. For those who can, how many of you can visualize this? If you combine both of them, if you combine both this candle, it'll look like a hammer, actually. Super. If you can't, it's okay. If you can't, it's okay. But whoever can, it's a great insight. It's a visualization power, right? That you can understand, right? Okay. So everyone clear with bullish engulfing? The understanding of Rameshji, yes. Uh, Clear understanding of what is happening. Clear understanding of what is happening. Why the buyers are acting. Who is weighting stronger. This main thing is now this body. This body of the green candle has to eat up the body of the green candle, bigger candle, is eating up the body of the smaller bearish candle. This combination together forms a bullish engulfing. Clear, everyone? Wick is not required. Wick is not required, but the body is perfect. Yeah, it takes basically two candlestick patterns combined together. You understand this. Okay, this is bullish engulfing. Okay, clear. Bullish reversal matlab price is going down. This pattern forms, and it now is a sign for you to push the price up. That the price is going to go up. Okay. What is this then? Bearish engulfing dikha aapko. Same thing. The price has been going up. Green candle formed. The red candle has eaten, the red body has eaten up the body of the green candle. Total pattern is formed. Okay. And then we're expecting price to move down. Clear. Now people are getting smart. I can see a hanging man is shooting star. Perfect. I'm so happy that all of you guys are able to visualize this. I'm sure if you are able to go in that level of thinking, you guys will be amazing. You guys will be amazing in technical analysis, candlestick analysis. I'm so happy that you guys are able to see these things. Okay. So guys, again, this is a bearish engulfing. It's a reversal. Price was going up and we see this pattern form and then the price is going down now. We're expecting price to go down after this. It's a reversal. Clear, everyone? Yes. Okay, sellers are taking over. Suddenly, sellers have taken over. Okay, so this was bullish and bearish engulfing pattern. Do I need to repeat this, guys? I hope it's clear, the difference, what is happening. This is the bullish reversal. This is the bearish reversal. All clear? Okay. Okay. This was the first double candlestick pattern. What's the second double candlestick pattern? It is called a bullish and bearish harami. Don't laugh at it. It is not our Hindi harami. Harami in Japanese means pregnant woman. In Japanese, harami means pregnant lady. Okay. So what is happening here? This is also a reversal sign. So price is coming down. Big red candle. This small chotu green candle, do you see forming in the belly of the bigger red candle? This is not a doji. It's a small green candle. forming at the stomach region of the big red candle. Can you see that? Like a baby bump, like a pregnant lady. Okay. This is also a sign of the price going up. Okay, Gangurji, I think I'm not mute. I have to check at your end. I'm sure everyone can hear my voice. You guys can hear my voice? Yes? Yeah, okay. Guys, understanding the logic behind it, the price has come down. There's a big red candle. Then suddenly the price now opens higher the next day and doesn't fall down anymore. It's a small little candle formed at the stomach of the big red candle is a clear indication of bullish reversal. The price has come down. Now we are expecting the price to go up from here. Again, as much as you guys might laugh, I'll tell you something. I'll tell you something, guys, that um, this now this harami pattern, like two patterns which I absolutely love. One, three actually. Marubozu is amazing. Works amazingly well. Second is engulfing. Third is harami. Harami is actually very powerful pattern. Okay, harami is actually very powerful pattern. Can you guys see this is the opposite of engulfing actually? This is the opposite of engulfing actually. Yeah, can you see that? Yeah, it's a mirror image of engulfing. So this is again a pattern that. So now this body has to be red. This body has to be green. Okay, this body has to be red. This body has to be green. Little in the middle. It's preferably in the middle. Okay, if it's like very below, then it doesn't count. If it's too above, it doesn't count. Little bit up and down also doesn't matter too much. But yeah, okay. Yeah, wick is not important in this pattern so much. This is bullish harami. Bearish harami is simple. The price has been going up. Green candle in that a chotu red candle is formed. The price is expecting to go down from here. Guys, everyone clear with these two? The second double candlestick pattern. First, we have done engulfing, bullish and bearish. Second, bullish and bearish harami pattern. Super clear? Clear? Okay, superb. I love it. You guys are absolutely killing it, by the way. Okay, so this is the summation of your bullish harami. Again, the notes will be there, so you guys can also look at you will have this notes with you in case you want to refer to it also, right? So this is there. So these were the two double candlestick patterns. Then we have a triple candlestick pattern called the morning star and evening star. Okay, morning star and evening star. Okay, so take a look at this. Okay, this is the price is going. This is what 3-day candles. Okay, so guys, can we just repeat what are the two candlestick patterns we have done till now? Double candlestick patterns, whatever we have done till now. Bullish engulfing, bearish engulfing, bullish harami, bearish harami. Easy, simple. Can we quickly revise from first? What are the candlestick patterns we have done? First, we have done Marubozu, bullish Marubozu, bearish Marubozu. Perfect. Then we have done Doji, right? We have done the different types of Doji, correct? Then we have done hammer and hanging man. We have done inverted hammer and shooting star. Perfect. Then we have done engulfing, bullish engulfing, bearish engulfing. Then we have done bullish harami, bearish harami. Complicated? Not complicated. Very simple. It's not about the name. It's about what, if I give you the candlestick pattern again, you will remember what to do with it. That's what is important. Okay. It's not about remembering, like memorizing the names. It's not. You don't get to marks for memorizing names. It's just about doing it. Okay. So let's do it and we'll then go to the live charts and we'll look at we'll try to identify some of this pattern in the live chart. Okay. Okay, before going there, let's do the last pattern that we're covering today. It's called the morning star and evening star. Okay. So this, can you see there are 3 candlesticks now? 3 candlesticks involved here. 3 candlesticks involved. Okay. So the first day, the price has opened. It's a green candle. Next day is a chotu candle at the top. And after that, the price comes down and closes below like this. This 3 combined is called the evening star. And this is actually the evening star. Now, how many of you have seen, how many of you know that in the evening, right, when the sun has gone down, before it gets dark, do you see that one star that you see before it gets dark? Like it's not yet dark, but it's still like evening. It's one star. You can see Jupiter, I believe, whatever, guiding star, North Star, whatever you call it. Yeah. Can you see like before it gets dark, you see one star there, pole star, chalo, whatever star it is. Okay. That star is an indication of what? That it is getting dark now. It is going dark now. So evening from day to night, when it is transitioning, this is a sign of, that's why I'm saying evening star. So evening star is a sign that it's getting dark. Dark means bears are coming in. Before the price has gone up, it was day. Evening star shows up and we're expecting price to go down. So all of these names have a beautiful meaning behind it. I hope now you will never forget about evening star. Evening star, matlab, it was day before, the price was going up before. Evening star happened, now it's getting dark, that means the price can go down. Clear? Clear? Morning star is ulta, right? Morning star is opposite. Morning star is, for example, when it gets from night, when it becomes dawn. You know the time dawn, right? You can still see a star after night, before the sun rises. You can still see a star in the morning. I don't know how many of you wake up that early in the morning, but sure, right? So there, that is where the star have morning. It tells you night is getting over. When you see that star, finally in the morning when the light comes in, you are now trying to understand that from night it's turning to day. That means from bearish, the price is now turning to bullish. Clear, everyone? Clear? Okay. Acha, it's a planet Venus, whatever it is, Venus, Moon. The point is not that which one is it. Okay. I'm just trying to make you explain about what is happening between evening and morning star. Okay, guys. So it's a three candlestick pattern involved in the 3 days. Okay, these three candlestick patterns forms the main idea of it all. Okay, so this is morning star. Sorry, this is morning star. So we see three candles. One candle is one candle is a bullish candle here. You see a smaller candle here. Then again it goes down. Right. So these three candles combined form the evening star. These three candles combined form the morning star. Quickly, guys, can we look at the chart and try to identify these patterns? So that it'll be a good revision also. We have also, can you guys believe that out of 3 hours, 2.5 hours is already done? Can you guys see how time is flying? Like people must have thought that 3 hours is such a long time and suddenly time flies, right? Uh, okay. So, okay. So we will look at some of the candlestick charts. Try to look at it. Okay. So we are looking at, so can you see all of this? Each of these are candlestick patterns. Can you see that? Each of these are one day. You look at it, right? So this is Wednesday, 25th September. This is 26th September, so on and so forth, right? You see that each candle is a day. This is one day. Okay. You can go to any time frame. For example, if I go to 1 hour, then each candle represents how much, guys? 1 hour. Each candle represents 1 hour. So as you change the time frame, if I go to 5 minutes, each candle represents 5 minutes. So 9, 2:50, 2:55, 3 o'clock, 3:55, 3:10, so on and so forth. Do you understand? Clear, everyone? If I go to 1 week, each candle represents 1 week. Okay, so let's try to do our analysis on 1 week chart. Okay, let's try to do our analysis. Let's try to find the candlestick patterns in 1 week chart. Okay, okay, guys. Okay, so first we'll start from Marubozu. Can you guys spot a Marubozu for me? Can you guys spot a Marubozu for me? Can I say this is a Marubozu? Can I say this is a bullish Marubozu? Yes, थोड़ा बहुत टकलू, मतलब one little hair is there, but is compared to the body, it's nothing, right? Compared to the body, it's nothing. Can I say it's a red Marubozu, green Marubozu? Yes, okay. Can I say this is a red Marubozu, this one? Okay. Can I say this one? And this one is a green one. Okay. It has a wick. Like I said again, it won't be perfect. But can you see in comparison, like look at the wick. Look at the wick. How like insignificant, right? Does the wick has any significance here? It has no value here. This much difference kuch matter nahi karta. That's why when I explain to you, you will not see a perfect one. Very rarely will you see a perfect one. But in terms of thing, it's a very, very strong thing. Okay. Can we now spot the next one, doji? Can we spot some dojis, guys? Can we spot some dojis? Okay, let's look at this one. What kind of doji is this? Okay, can I say this is a doji? Perfect doji. Can I say this one is a perfect doji? What am I doing? This one? Yeah, this is a doji. Correct. Can I say this? What kind of doji is standard doji, guys? Standard doji. This is standard doji. Yeah. Can I say this? What kind of doji is this? This one? Graveyard doji. This one? Yes, gravestone doji, graveyard doji, even I mess up names. The point is not the names. But do you understand this is a sign that the sellers are some little strong? Sellers are more strong, slightly bearish. Okay. Let's try to find a different one. Let me see if I can find a thing doji for you. Uh, Dragonfly doji, na? We are looking for Dragonfly doji. If you guys know, can see a Dragonfly doji, maybe. Can you see this is a Dragonfly doji? Is it a Dragonfly doji, guys? This one? Dragonfly doji? No body. Dragonfly doji? Yes. Correct. Perfect. Understood. Doji. Clear. Bulls are strong. Okay. What's the next one that we're looking for? Any other hammer? Let's try to find some hammers. Let's try to find some hammers. I will try to help you with some hammers. I hope I can find some hammers, but I'm not sure I'll find the perfect one. Can I say this is a hammer? This one? This one hammer? Can I call it a hammer? Yes. Yeah. Perfect. This is not a hammer because a hammer has to be, the market has to come down, then a hammer has to be formed. Like this. The market has come down, a hammer is formed. This is a hammer, and the price has gone up after this. Okay. Okay, hammer is clear. Let's look at hanging man. I'll try to find hanging man. It's difficult to find hanging man on a weekly chart, but sure, let's try. If you guys can find hanger man, you're finding candles for fun like departments in the thing. See, when you train your eyes to find this patterns. Okay, can I say no, it's not a perfect one, but can I say this is a shooting star, guys? It's not a perfect one, but it's still a shooting star. Yeah, yeah. Oh, someone said hanging man kahan pe tha? Did I miss a hanging man? This one. Correct, correct, correct. Hanging man. Price went down from there. Perfect, perfect, correct. Yeah, I'll find if I go to hourly charts, I will find a lot more patterns, but I'm just showing you guys. Okay. Anyways, let's just go. I don't want to change. I don't want to confuse you guys. Okay. So, next, let's find engulfing. Engulfing. Let's find about engulfing. Yes, yes. Engulfing. Let's find engulfing. Engulfing. Body कहाँ पे engulf कर रहा है? Can I say this is engulfing? This was engulfing. Yeah. Can I say that? Engulfing. Okay. Let's try to find more engulfings. November 18th. November 18th. ये वाला engulfing नहीं है. Not really engulfing. This is engulfing. Correct. This is engulfing. Right? This is engulfing, guys. Ate up the body now. It's eaten up the body. Can you see? Yes, it's eaten up the body. Engulfing. Okay. Okay. Then let's. This is bullish engulfing. Can you see bullish engulfing? Can you see bullish engulfing, guys? Bullish engulfing. Green body eating up the thing body. This is engulfing. Can you see this? The green eating up the red. Yes. Can you see that? So yeah, a lot of bullish engulfing. A lot of bullish engulfing here. Bullish engulfing. So on. Okay. Can we see harami patterns? Can I say, oh, look at how beautiful harami patterns are. Huh? Look at this pattern. Beautiful harami pattern. Look at this. Can you see this? Harami pattern? Like a pregnant woman, body is near the belly. Okay. This is a perfect harami pattern. And you see the move after that, how the price went up after that harami pattern. Even though the price has been falling before that, how the price went up after harami pattern. Okay. It's not in the middle. Like I said, it doesn't have to be perfect. Okay. It doesn't have to be perfect. Okay. We can try to find some more. Okay, I think we should go on a daily chart or something. Okay, we'll find more patterns there. Just letting you know. Okay. Okay. Can we? I'll just because I spot it right now. Hence, I'll just mention it. Can we say that this is a evening star? Can I say that this 3R is a evening star? Evening star. Up 3 candle, chotu candle down. Evening star. Yes, beautiful, 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 beautiful. Can I say this is a morning star? Not perfect. This is a evening star. Again, this is a evening star. Morning star, I'm trying to find for you guys. If you give me some time. Give me some time. September 10th. Uh, yeah, but the thing should be actually below. This candle should be below. Uh, yes, so these patterns can be automated using AI. Okay, it can be automated. But why am I teaching you all of this? If you don't understand the patterns, will you even know what to ask the AI tool to do? You will not know, right? You have to know the concept first to ask the AI, ki, find me a evening star. And I will tell you have to tell it what's the evening, define an evening star for the AI tool to find. Got it? So that is, can we see a hammer here? Hammer here. Okay. So, fair guys, you get my point. Can you see a very nice thing? Not this three pattern, okay? Only these two candles. Can I call this a harami pattern? These two. Only these two. Only these two. Not this. Ignore this, okay? Only these two. Can I call it a harami pattern? Yeah, 4th June. What has happened in 4th June last year? Election results, right? So this is a good harami, bullish harami pattern. Okay, perfect harami pattern. You see how the price moved after that. So it is very simple. So explaining all of this, are you guys clear about all the patterns that we have done? Clear about all the patterns we have done? The more you look at it, the more you practice it, it'll be easier for you to find all of these patterns. Of course, it can all be automated, but it's again important to understand how to do this. Okay? You need to practice. Yes, of course you need to practice. Okay? ये क्या है? What pattern is this? Chalo, quiz. What pattern is this? Hey, it's not. It's bearish engulfing. It's not harami. How is it harami? Harami is ulta. Okay? It is bearish engulfing. Okay? Bearish engulfing. Okay? Uh, p- p- what pattern is this? What pattern is this one? This red candle here. Hanging man. Perfect. Hanging man. Perfect. This is a what's sorry. What candlestick pattern is this one? 30th April. What doji is it? What doji is it? What kind of doji is it? Yeah, long-legged doji. Long-legged doji. Buyer is stronger. Dragonfly doji. Yes, dragonfly doji. Perfect. And others are just normal dojis, right? These are all normal dojis, which are basically there. Okay. So, yeah, I am think we are basically done with the first part of the session that we have. So from first, I'll just quickly repeat what we have done till now. So we have basically covered we are we are basically we have basically covered what are the things basics of stock market. We've understood some jargons, right? Limit order, market order, stop loss order, what is index, all of those basic things. We've understood technical analysis, what is technical analysis, and we have also understood what else. We have understood the different types of candlestick patterns: single candlestick, double candlestick, and triple candlestick patterns. Okay, give me a quick yes, everyone, if it has been simple and easy. Okay, like I want to say again, the reason that we are doing all of this now is so that all of this is pushed aside, so that when we start our sessions from week one, we will jump directly into now the next question will be Pratik from here. How can I, when do I buy, when do I sell, all of those things? Practically, we'll do all of that. Just understand its concepts now. Then we will do the main part, which from week one, week two, we'll start doing entry, exit, when to buy, when to sell, all of those things. Okay. Okay. Perfect. So after that, right? So today's session, what we'll do is when before, we will meet again at 3. We'll meet again at 3 o'clock. Everyone, 3 p.m. We'll meet again. We will be covering the different types of indicators. We'll be covering indicators. One. Then we will also be covering 1.5 hours. We'll do it. We'll take a 10-minute break, and then we will cover our futures and options also. Okay, everyone. We'll cover those three things. So we'll be covered completely with all the basics. Okay. Clear? Perfect. Okay. Perfect. Actually, wait. Can I cover some other stuff because we have time? Can we do some other stuff and then finish off so that we can finish off some parts? Okay, so let's cover off some other parts also. Okay, uh, give me some moment. So we have some chart patterns to cover. I will go through this and then we can break. Okay, guys, okay, let's do that first. Okay, cool. Okay, so chart patterns and caps. Okay, so what we are doing first, you have to understand. Oh, sorry. I have not shared my screen. My bad. My bad. Can you see my screen now? Yeah. So we have understood Dow theory. What is Dow theory? Basically, it's a theory to understand market trends. Okay, whether the market is going up or whether the market is going down. All of those things. Now, all of you know this part, right? What is an uptrend? Each high is higher than the previous high. Each low is higher than the previous low. This is what bullish market uptrend. Guys, uptrend is bullish market. This is downtrend. This is bearish market. Okay, lower lows, higher lower highs. Okay, then we have sideways market. This all three parts are clear, everyone. Bullish market, uptrend, downtrend, and sideways trend. Now there are three types of trend. Okay, three types of trend: primary trend, minor, intermediate trend, and minor trend. Okay, now there are three types of trend. This blue line is called the primary trend. Okay, that means is the stock going up or what? Is it going up? Primary, is it going up? Then this black line is called the secondary intermediate trend, and the smaller trend is minor trend. Okay, so let me just quickly explain to you how it looks. Okay, so if for example I look at this chart, what is the primary trend, guys? Can I say the primary trend is up? Primary trend is up. Okay, in that primary trend, now can I say that this is the red line is the primary trend? Okay, now can I say that this is secondary trend? This one, this line, this line is the secondary trend, intermediate trend. Okay, so in even though when the market is going up, you see up and down movement, intermediate trend. And in this intermediate trend, you also see, for example, this is intermediate trend. In this, you also see smaller uptrends and downtrends. In this choto, you can see, which is marked by, let's say, blue. Can you see that? Smaller minor trends in between this, inside this intermediate trends. So they are how it is defined. Okay. So primary trend, minor trend, intermediate trend, and minor trend. Okay. So that is basically what Dow theory is basically explaining to us, that three types of trend: bullish, bearish, and downwards. And in those primary, neutral, primary, intermediate, and minor. Minor is very short-term trend, chota mota trend. Okay, small, small trends. Okay. Now, let's understand some phases of the prime thing trend. So you will know that when you look at this part, you will see that this is what is happening in the market. Okay, so market usually goes down. There is accumulation that all the strong buyers are buying. It pushes the price up. This is the uptrend. Then there is distribution where the strong sellers are selling, and then the downtrend. So most market moves like this. The problem is people. Problem is we don't understand this. We don't understand this primary, secondary, and tertiary trend. We need to basically understand when to buy and when to sell. So when we go deeper into Dow theory in the coming weeks, I will be explaining to you guys when is it that will be entering your stocks, when should you be selling your stocks, how your mindset gets affected, and all of those things. Okay, so we will be covering with Dow theory. All of you have that question, right, Pratik? When do I buy a stock or when do I sell a stock? Let's say for investment purposes only. Some people to buy also at the right time, but don't know how to sell, right? So that will be covering using very important concepts of Dow theory. Okay, everyone. So that will be covering in the coming weeks. For now, understand few things. What's the first thing, guys? Uptrend, downtrend, and sideways. Okay. So if I have to mark it here, can I say that this is downtrend, this is sideways trend, This is uptrend, sideways trend, uptrend, sideways trend, downtrend. Markets can always be divided into three parts: downtrend, sideways, and uptrend. Okay, we will be going when we go into deeper into it. We're building strategies around it. We will be understanding how to go about when to buy, when to sell. Okay, clear. So remember, so whenever we will be covering Dow theory, I will be referencing this part to you guys. Okay, and we'll be coming into when to buy, when to sell, all of the above. Now, I also want, because we have about 15 minutes, I also want to cover some parts of chart patterns. Very simple. Can we do that, everyone? The more we do, the better time we have for later. Yes, yes, yes. Not tired now? Okay, okay. Super, super. Okay. So chart patterns now. Have you guys, so till now we've been studying candlesticks, right? One candle, two candle, three candles, right? Candlesticks we have been studying, right? Now we are going to combination of candlesticks, right? You combine many candlesticks together, you form chart pattern. Okay, entire. So if I basically show you this, if I show you this, each is one candlestick, but together combination of candlesticks forms a chart. We are trying to understand patterns in this chart, for example. Okay, guys. So we have two kinds of patterns. One is a reversal pattern and one is a continuation pattern. Difference kya hai? Let's say price is going up. Price is going up. Again, I will use a thing. Price is going up. Some pattern has been formed which shows that the price is going to continue going up. That is a continuation chart pattern. Okay. Price is going up. Some pattern is formed which shows reversal. That means the price is now expected to go down. Okay, everyone? Clear with what is continuation, what is reversal? Continuation pattern shows you price is going to continue in the same direction. Reversal will show you price is going to reverse, go down. Okay, price is going to reverse opposite. Okay, so very simple. I'll just remove my annotations. Okay, okay. So we have understood. We have understood. What is continuation, what is reversal. Now we are coming to the different types of reversal patterns. Reversal patterns, मतलब क्या guys? Agar price is going down, we see a reversal pattern. We're expecting the price to go up from there, from bearish to bullish, or from bullish to bearish. Okay, switch trend. Yes, perfect. So the first is double top. Okay, double top. What is happening here? Price is going up, resistance, first resistance, coming down, price is going up, second resistance, and then breaking down. What has happened? The price has gone up, touched the resistance once, comes down, touched the resistance second time, broken down, and it is now going to go down. So do you see it has reversed? Price has reversed. It has touched the resistance twice and then reversed down. Right? Price has touched the resistance twice and then has reversed down. So that is called a double top pattern. Can you see it's an M? It's an M, right? It's an M pattern. Okay. That's a double top pattern. Okay. So if you want to see, this is what a double top pattern looks like. Clear, guys? Price has gone up, double top. And what has happened? The price has gone down after that. So what has happened? Do you see through this pattern, we are understanding that the price has gone reversed from up to down. Do you see it's a combination of candlesticks? Do you see it's a combination of candlesticks here? Okay. Combination of candlesticks. Yes. So everyone clear with double top pattern? Double top. How many days we can't say, but it is still a thing, candlestick pattern. It's a chart pattern. Okay. Okay. So if you see here, you will see, look at the replay going here. The price is going up. What is happening here? The prices come down. What has happened? Do you see double top happening here? Do you see how it plays out? Everyone? If you want me to do it again, I'll do it again. Price is going up. First top is formed. Second top is touched and then it goes down. Perfect. Okay. Simple, no complication. Double top. Okay. Now, what do you think this means? If double top is M, double bottom is W. Right? Do I need to explain what double bottom is now? Because you guys have already understood double top. Very simple. right? So that was from market is going up, then it's turning to down. This is ulta. Market is going down, W is formed, and the price now goes up. Bullish reversal. Perfect. So if you look at an example, let's look at an example here. What is happening here? Double bottom. Do you see? Double bottom, W formation, and the price continues going up. Clear, clear, everyone, with the double top and double bottom. Super, super, super. What do you think this is now? What do you think this is? Triple top. Matlab three. Top one, top two, and top three. Bearish. It's a reversal sign again. Bearish reversal. It's a bearish reversal. Can you see three tops? One, two, three, and then breakdown. Yes. One top, two top, three top. Yes. So unless this gets broken, this is where you are able to do it. Okay. So this was one, the triple top. Everyone, double top, triple top, double bottom clear. Yes, clear. What do you think this is? Triple bottom? Anything that I need to go by now? You guys already know before I reach. The name only explains it. What it is. Triple top means what? Triple bottom means what? Price comes here, goes up, price comes here, goes up, price comes here, break. Okay. Can you guys see this? Can you guys see this? We are only after the double W happens. W and V, correct. W and V combined together forms a triple bottom. W and V combined together forms a triple bottom. Clear. Okay, super. I'm going a little fast, but I don't think we need to cover this too much because it's very clear. I'm just covering this because, uh, you know, it's very simple. The name only implies it, right? Okay, perfect. Okay, then is head and shoulders. Head and shoulders, okay. What is head and shoulders? You see here, do you see two things here? This is the head, this is one shoulder, and this is one more shoulder. So price is going up, one shoulder is formed. The only difference here between triple top and this is that the middle is higher. Do you see that? The only difference between a triple top and this is that the middle one, which has gone up, there's a crown which goes higher than the other two. Everyone, the difference between a triple top and this is that the only thing is this center part goes higher. Okay, there's no other difference. Okay, and then when it breaks, it's a reversal pattern. Okay, so you can see here. Can you guys see this? 1, 2, 3. Now, does the shoulder have to be equal? No. Does the shoulder have to be equal? No. Okay, sometimes you don't get perfect. Not needed. Okay, Pushpa shoulder. Yes, Amitabh Bachchan shoulder, Pushpa shoulder. Yeah, perfect. No problem. Okay, yeah, perfect. Okay, it's you guys the joke, and I am not said this. But someone has mentioned this Pushpa, hence I'm telling you. Okay, so this is a head and shoulders pattern. If this is head and shoulders pattern, what do you think inverse head and shoulders pattern is, guys? What do you think inverse is? Correct. Ulta. That was bearish reversal, right? Market was going up, it turns to bearish. This is opposite. Mirror image, right? So this is, can you see bearish? Price has come down, first shoulder, head, second shoulder, and then the price goes up. Reversal. Clear? Everyone? Head and shoulders also. This is Mohanlal shoulder. People have got jokes, right? Clear now? It's good. It's good to remember. Use all of this to create your own analogies to remember all of this. It's fun. You don't have to be all serious all the time to remember head and shoulders. This you can play around with it and have fun with it, right? So this is head and shoulders, inverted head and shoulders. Clear, everyone? Okay. The next one is inverted cup and handle. Okay. Can you see a cup here? And can you see a handle here? Ulta cup and handle. The cup is up ulta and the handle is ulta. Like if you take a cup and you keep it on a table like an igloo. Yes, like an igloo. Perfect. Okay. It's like an igloo. Right? So if you for example see this, can I say that this is an inverted cup and handle? Inverted cup and handle? Yes. Can I also say this is also head and shoulders? If I take this part also, it'll become a head and shoulders. So you see, it's up. But the point is what? Head and shoulders also is telling you that the price is going to go down. Cup and handle also is telling you the price is going to go down. Fair, everyone? You understand? It is giving you the same idea. But some people may look at head and shoulder, some people may look at cup and handle. My duty is to teach you both. Some people may look at M, some people may look at double top. You can do whatever. The idea at the end of the day, are you coming to this or not? Or everyone is getting the same opinion out of that or not? And that's what is important. Clear, everyone? Clear? So can I just quickly, till now, whatever reversal patterns we have done, can we just quickly revise it? Can we quickly revise what are the patterns we have done till now? Okay, so very simple. What's the first one that we have done, guys? Chalo. What's the first one that we have done? Double top, double bottom, triple top, triple bottom. After that, head and shoulders, inverted head and shoulders, cup and handle, inverted cup and handle pattern. Clear, everyone? It's very, very simple. Very, very simple. These are the reversal patterns. Matlab, if the price was going a certain way, it is expecting us to reverse it. It is expecting us to reverse it. Yes? Okay, yeah, this is simpler than candles a bit. Yeah. But by now, you guys have understood all of that. Okay, so we have continuation patterns, but we will do the continuation pattern in the second half.